Is it possible for a few stocks to truly transform your life? Stay tuned, as we are going to reveal the secrets of strategic investment and how it can change your financial situation. Tony is an experienced investor who has a talent for finding hidden treasures in the stock market. He will be our guide for the day. We're also going to share his viewpoint on how 10 well-chosen stocks can transform your life and guarantee your financial independence. Please hit the like button, subscribe to Tesla Stock News, and let's get this video started because you won't want to miss it. The energy industry is changing dramatically from what it was a few years ago. Tony Seba's pioneering work has shown us the way forward, and it has the potential to completely change how we generate, store, and use energy. Coal use has reached all-time lows. Those days are long gone. Once thought to be the key to a cleaner future, natural gas has been surpassed by solar energy combined with sophisticated battery storage, which is both more sustainable and financially feasible. It really is a game changer, Seba's revelation. There has been a significant change in the energy environment as solar energy is now more cost-effective than natural gas due to its fast declining costs. Bob Dylan's famous statement, "The times they are a-changing," is reinforced by this finding. Tesla is at the forefront of this revolutionary period and is ideally positioned to profit from this profound transformation. It's critical to acknowledge that historical energy experts have frequently undervalued the significance of data and market movements. Over the previous 10 years, traditional energy assets have been overvalued due to this undervaluation. Remarkably, half of the U.S. energy fleet has been retired and replaced, demonstrating how quickly things are changing. In addition to offering affordable options, these energy sources, which include solar and wind, perform better than their predecessors in terms of efficiency and environmental effect, according to Seba's analysis. The idea of matching supply and demand is what differentiates this from conventional energy generation. Imagine being the owner of a power plant that can produce 100 megawatts of energy, but there is only about 50 megawatts of demand. Amazingly, the fixed costs haven't changed all that much. This is where solar energy shows itself to be a viable and cost-effective substitute for conventional energy generation when paired with just 4 hours of storage. According to Seba's research, clean energy would not only be sustainable, but also profitable in the future. It's crucial to realize, nevertheless, that the majority of expenditures in the energy sector are related to fixed costs, like those associated with mining, infrastructure, and land acquisition. Whether you're producing 50 or 60 megawatts, or the entire 100 megawatts, the total cost of building and operating the power plant is rather same. This emphasis is a crucial element of the energy shift. Let's take a closer look at the idea of the levelized cost of energy, LCOE, a vital statistic in the energy sector. The energy sold, not the energy produced, is used to compute the plant's lifecycle operating expenses, LCOE. Seba has brought attention to a notable inconsistency in this computation, as has been noted by specialists such as Adam Dorr and the think tank Rethinks. The main problem is that analysts tend to assume that traditional power sources have a demand rate of 85%, even though the actual number is far lower and still falling. The mismatch between the real and expected levels of demand has far-reaching effects. There's less need for conventional ways as energy sources, such as solar and wind, coupled with batteries, continue to perform better. Because the cost to build and operate the plant is the numerator in the equation, this decline in demand dramatically raises the LCOE. Recognizing that energy transmission results in losses is also crucial. For the purpose of illustrating the benefits of localized energy generation, let us compare solar and wind power. Although wind turbines need room, they can be positioned carefully in different places, like farms, closer to the source of energy required. An even more remarkable example is provided by solar power. Thanks to technological improvements, anyone can choose to put solar panels on their roof. Ordering solar panels for your own rooftop is similar to this. Notably, it's getting more and more affordable as compared to buying electricity from the grid. When you choose this option, electricity is produced nearby on your roof and used either inside your home or to charge your electric car. Now, let's take a look at the process of building a new solar power plant for a utility business, such as Georgia Power, but on a somewhat larger size. As soon as the solar panels are built and installed, a few acres of land can be found and promptly put into use. Instead of the years that conventional power plants frequently need, this procedure just takes a few months. By doing this, we may reduce power losses throughout the grid by minimizing transmission distances. These solar farms can also be positioned strategically where they are most required. To accommodate this demand, a new coal or gas-powered plant would have to be built, which would be very costly and time-consuming. But establishing one or several solar farms nearby is a lot more adaptable and effective option. Capacity can be gradually increased as needed to keep up with the town's growth. Unmatched flexibility is possible with wind and solar power, particularly when combined with battery storage. Increasing the production of wind and solar energy in little steps is far simpler than constructing a sizable conventional power plant. The grid becomes more decentralized as a result, which is good. The grid gets more resilient as energy output gets more concentrated. Decentralization is essential to preventing extensive power outages, as demonstrated by the Texas incident in which the grid failed throughout the whole state. What does all of this mean for nuclear power and fossil fuels, then? They discovered that they are caught in a vicious circle. The need for conventional power sources declines as alternative power sources grow more competitive. Higher prices follow from lower revenue as a result of this. However, regardless of how much energy they produce, traditional power plants have significant fixed expenses that cannot be reduced, which is why these higher prices are attributed to them. This starts an increasingly difficult-to-break cycle of self-perpetuation. Furthermore, the extraction and production expenses associated with fossil fuels and nuclear power are continuous and frequently rising. As reserves decrease, mining these resources becomes more difficult and energy-intensive. In sharp contrast, the cost of solar and wind technologies is falling, and they are developing quickly. This tendency is also being seen in battery storage, which is utilized to store and deliver intermittent energy. This tendency is consistent with Wright's law, which states that every doubling of production leads to a cost decrease that promotes innovation. There are important ramifications for conventional internal combustion engine vehicles from this change in the energy landscape. Gas and oil are going to get more and more expensive over time. In actuality, existential issues could arise with these sectors' basic foundations. Conventional energy sources are limited, and as reserves run out, production and extraction costs will probably increase dramatically. Let's now concentrate entirely on Tesla, the business that is positioned to benefit from this energy revolution. One word best describes Tesla's success story: batteries. The cornerstones of Tesla's energy strategy are solar power and an endless supply of batteries. These technologies are becoming incredibly affordable and developing at a rapid rate. Batteries and solar power are expected to surpass even natural gas, which was the least expensive fossil fuel available for energy production until recently. As previously stated, RethinkX claims that solar energy combined with just 4 hours of battery storage is already less expensive than natural gas, a breakthrough that is truly astounding. The economic feasibility of renewable energy sources, particularly solar energy combined with cutting-edge batteries, cannot be disputed. The energy products and software offered by Tesla are state-of-the-art. Energy arbitrage is a concept that Tesla is enabling energy providers and consumers to profit from while they sleep. This entails buying energy at a discount and reselling it to the grid at the peak of demand and, consequently, price. By utilizing the power of clean energy, Tesla is essentially assisting in transforming households into miniature power plants. Furthermore, the architecture of Tesla's electric cars offers unmatched versatility. Electric vehicles are not restricted to using only one type of fuel, like internal combustion engines, and can obtain electrons from coal, natural gas, nuclear, hydro, or solar power. EVs are flexible. The real brilliance, though, lies in the fact that electric cars are flexible and progressive. Imagine a day in the future when innovative energy sources like nuclear fusion are practical. Although this seems like science fiction, Research and development in this area has advanced significantly in recent years. EVs can easily adapt to use this cutting-edge technology if fusion power becomes a reality, guaranteeing that they stay at the forefront of energy innovation. Fundamentally, Tesla has much bigger plans than just building electric cars. According to Tesla, the energy landscape will be more flexible, decentralized, focused on localized energy generation and consumption, and allow for the purchase and sale of energy through battery storage. All of this is made possible by the comfort and practicality of electric cars. This concept is a wonderful fit with Tesla's primary goal. It elevates Tesla beyond the status of an automobile manufacturer and positions the business as a provider of energy solutions. Tesla aims to transform the way the world produces and uses energy, not just to rule the electric vehicle market. Tesla is actively fostering a future that is more environmentally friendly and sustainable by doing this. Consequently, Tesla has solidified its position as a major player in the stock market with a market capitalization that is close to $600 billion. The way Tesla's stock has defied conventional knowledge and established valuation criteria is what makes it so fascinating. Investors and analysts have occasionally been confused by Tesla's valuation, but it's critical to realize that Tesla isn't just any car company. Rather, it stands for the energy and transportation of the future. Innovation, technology, and a dedication to sustainability are the company's driving forces. Although there has been fluctuation in Tesla's stock, the trend has been upward continuously. Early investors have reaped substantial rewards from this increasing trend. The road that separated Tesla's 2010 first public offering from its being a dominant player in the market is quite remarkable. Think about this. Your $1,000 investment could have increased to over $36,000 by 2020 if you had invested in Tesla at the time of the company's 2010 IPO. This astounding return on investment is evidence of Tesla's quick ascent and the confidence in its leadership and mission. One of the main voices in the Tesla stock discussion is Cathie Wood, CEO of ARK Invest. The positive prognosis that ARK Invest has for Tesla has attracted a lot of attention. Wood has some extremely lofty expectations for Tesla's stock. By 2026, she believes Tesla's shares will have skyrocketed to an astounding $4,000. The increasing demand for driverless ride-hailing services is one of the many factors that ARK Invest takes into account when updating its estimates. This might be a major element in Tesla's future growth. The story of Tesla's stock rise is one of tenacity, willpower, and the unshakable faith of its backers. In spite of the doubters and critics, Tesla has persisted in exceeding expectations and setting new records. Its stock market path is evidence of the disruptive technology's ability to completely transform whole industries, as well as the power of innovation. Let's now examine the opinions of well-known investors, such as Charlie Munger and Warren Buffett, with regard to Tesla's stock and the overall electric car market. Renowned investor and Berkshire Hathaway CEO Warren Buffett is renowned for his astute financial choices. Though they haven't made a direct investment in Tesla, Berkshire Hathaway has made large bets in the electric car market, most notably with Chinese automaker BYD. There has been conjecture and attention over Berkshire Hathaway's possible consideration of investing in Tesla, though it's not completely impossible, considering Tesla's incredible rise in position as market leader for electric vehicles. There is no denying the trend towards electric cars, and it is difficult to overlook Tesla's leadership in this market. Charlie Munger, who is sometimes considered as Berkshire Hathaway's wise man, has been open about his opinions towards Tesla. He views Tesla as a remarkable accomplishment for the U.S. auto industry. Munger